Today, we're going to talk about enterprise analysis. And before we get started, I wanted to share a story with you about a farmer I worked with. And I remember that aha moment when I realized a farmer could be earning $25,000 more in profits every year without increasing production. He had called me exhausted. He was working nonstop and just couldn't work any harder. He was frustrated because his wife wanted to quit her off-farm job, but they couldn't afford for her to give up her salary. And he also couldn't work any harder to get to the profit goals where the farm could support them. And they just felt like they were spinning their wheels. They were raising and selling livestock, chicken, pigs, and cattle, and they were selling at farmers markets and through home delivery. They were expanding to have an online store so they could ship their meats and expand to their markets beyond their local community. And despite all the production and all the sales, they just weren't getting there. And he had called me to figure out what was the missing piece in this puzzle. Is it really possible to have a farm business that's profitable, that supports your family and achieves your goals? As it turns out, the answer is yes. With a thorough analysis of his numbers and his sales and expenses, we organized his numbers by product and by sales channels. And we could see which products supported the business and which products dragged the business down. More importantly, we could see which products generated the most profits for his time invested. And he generated the most profit selling at a pop-up farm store. And even though it took more time to advertise and set up, the volume of sales for that effort was the most productive. In other words, by focusing his energies on his most profitable products and cutting back on the products he was losing money on, he could increase the overall profits of his farm without any work. You have limited resources, and more than money, you have limited time. There's only so much harder you can work. And at some point, you need to figure out how to generate more profits from the same amount of time. And you need to understand not just your profits, but your profits for each enterprise and your profits for your labor invested. I was able to help this client as well as hundreds of other clients figure this out. And I want to share with you that process so that you can see the same results. I want to help you stop guessing about what makes you money and start making data-driven decisions to grow your business. For those of you who don't know me, my name is Julia Shanks. I'm a recovering chef. I am the author of the book, The Farmer's Office, and I work with businesses to help them achieve financial sustainability. I am also an entrepreneur, so I know the struggles that you are facing trying to juggle production and financial management and marketing and all the things. And I want to share with you Ambrook, which is a modern accounting platform that drives independence for America's family farms. And it's a tool that can help you understand your numbers in a way to see that kind of success that my client saw. So why did you start your farm business? Did you start it to sit at your computer and do bookkeeping and analysis all day? No, of course you didn't. You started your farm business because you want to be outside, working the land, changing the way we farm and eat, and you want to support your family. And to get there, you need a profitable business. In mathematical terms, you need your revenue to exceed your expenses, the revenue from the sales of produce, meat, value-added products, and all the expenses you have to achieve that revenue, those sales. So I know you know this, but just, business 101. Your revenue or your sales is what the business earns through the course of its normal business. Your expenses are the money you spend through the course of doing your business. And your profits are revenue minus expenses. It's what's left over. And written as a formula, it's revenue minus expenses equal profits. And obviously, you want your revenue to be greater than your expenses. Now, that's a very basic goal. Beyond that, you really want to do better than that. You don't want to just exceed your expenses. You want to have net profits to exceed your other cash needs, your debt service, reinvestment in the farm business, and personal living. You want to support yourself, live a wholehearted life, be able to take a vacation, save for retirement, kids' college education, all of those things. And you want your farm business to be able to do that. So today's goal is to help you achieve your business goals through strategic financial analysis. And I want you to understand how you can improve your profitability with your farm business with better record keeping system using Ambrook's enterprise analysis tools to help you get there. So, to achieve your goals, you need a system for organizing and understanding your numbers, not just the business as a whole, but the different segments or the different enterprises. So, why bother? Why is this record keeping so important? And why can't you just get outside and farm? Well, your numbers tell a story, and you can tell the same story with the same numbers. You can tell a story that you're spinning your wheels, or you can tell a story that you're building equity. And the exact same numbers can tell a very different story, and it all depends on how you record the transactions. So let me give you an example. Let's say you purchase a new greenhouse and you have revenue for the year of $100,000. The greenhouse costs $15,000 and you have other expenses in running the farm business of $60,000. Now, the question is, do you record the greenhouse purchase as an expense or an asset? Now, if you record the greenhouse expense or the greenhouse purchase as an expense, then you have revenue minus expenses is your net profit. So revenue 100,000 minus 15,000 for the greenhouse minus 60,000 for all other expenses, you have a net profit of $25,000 and you have no assets. If you record the greenhouse purchase as an asset, then your net profit is $40,000. It's the 100,000 in revenue minus the 60,000 in expenses, and you have an asset for $15,000. Exact same numbers, very different story, all in how you record the numbers. And I ask you, which one would you rather have? Which business looks better to you? So, reason number two, why bother with all the financial record keeping? Let's say you forget to record a $20 expense. As a result, your reported expenses go down and your reported profits go up. And when you have higher profits, you're paying more in taxes and you have more cash outflow. And nobody wants to pay more in taxes. So, recording all of your expenses ensures that you have accurate records and accurate reporting for tax purposes. Reason number three, and why it's important to keep effective records that really tell the story of your business. Let's say you download your transactions into Ambrook and you don't bother to tag them by enterprise, you just generically tag your expenses. So the effect number one is you can see the business only as a whole and not the drivers of profit and losses. And the second effect is that when you want a strategy for growing your business and improving your profits, you don't know where to look. So, what does that look like with analysis? So, this is a real story, but with fake numbers. Let's say here's your financial statement, you have your revenue and you have your expenses. So, how will you grow your business? If net profits of 10,500 is not enough for you, where do you look? What changes do you make? Now, if we were to separate out your business by enterprise, by the different types of products that you have, you can see, what does the beef contribute to the business? What does the pig part of your business contribute? What do the chickens contribute? And when we break it out like this, we can see that the pigs, in this example, obviously fake numbers, but the pigs are the most profitable enterprise in your business. So as you think about growing your business, are you going to focus on the beef, which is the least profitable, or are you going to focus on the pigs, which is most profitable? And having this extra step in your record keeping allows you to do a more comprehensive analysis. So let's talk about what is an enterprise. An enterprise is a specific project or venture within the business. It can be vegetables and flowers in a diversified farm. It could be chicken and pigs in a livestock operation. It could be produce or value-added products. And each enterprise has its own cost structure. It will have direct expenses as well as indirect, and we'll get to that in a minute. And it allows you to evaluate the profitability of the different enterprises so that you can factor in the direct and indirect costs. So there are different types of enterprises. You can have a business where each product is an enterprise. And I'll give you an example of Pete and Jen's Backyard Birds. And their products, chicken, eggs, rabbits, and pigs, individual products, and they're also individual enterprises. If you only have one product, your different enterprises could be the sales channel. So B-Side Flower Farm just sells flowers, but their different enterprises are the CSA and their wholesale. A mix of products and individual products can also be enterprises. So in the example of West Fork Homestead, their vegetables are one enterprise. That's a mix of products. And the chickens and the turkeys are individual products and individual enterprises. And a mix of products can be an enterprise in the example of Rocksteady Farm. They have flowers and they have different kinds of flowers. And together, the flowers are an enterprise. And likewise, they have many types of vegetables that they're growing. It's a mix of products. And the vegetable production is an enterprise on its own. So when we do enterprise analysis, we're looking at each enterprise on your farm because we know each enterprise has its own revenue and production structure. And we want to ensure that each enterprise is profitable. And if it isn't profitable, then we need to make changes, either figure out how to make it more profitable by reducing expenses or increasing prices, or reduce the farm's reliance on that individual enterprise. Some products you may not be able to get rid of. If your customers come to your farm because of your eggs and the eggs aren't as profitable as the pigs, for example, you may not be able to get rid of the eggs because that's what brings in your customers, but perhaps you don't want to rely exclusively on the eggs for your profits. So knowing where to focus is one of the parts of enterprise analysis. So let's clarify the distinction between enterprises and sales channels. So if you go to the farmer's market, you may sell $500 worth of eggs, $700 worth of meat birds, $1,000 of vegetables, $250 of flowers. And the question is, how do you record the sales? So the enterprises are the meat birds, the vegetables, the eggs, and the flowers. The channel, the sales channel, is the farmer's market. And if you think about this looking at a profit and loss statement, do you record it as farmers market sales or do you record it as product sales? And it's really hard to do both. And that's the conundrum that we have when we're trying to do enterprise analysis and setting up our record keeping system so that we can record both components. So you do want to track both because it's helpful to know what you sold for each sales channel and for each enterprise. And you want this sort of matrix, this 2x2, so that you can see the sales channel and the product. And the good news is that Ambrook lets you do both. You can track both the category, which is the sales channel, and that's what you're going to see on your profit and loss, and you can tag the enterprise. And that's what we're here to talk about today, is how do you track the enterprises, and then what do you do with this information to analyze your business? So by tracking the enterprise, you can see the business not just as a whole, but the contribution of each enterprise to the farm. So the revenue, we want to know the revenue for each enterprise, the eggs, vegetables, meat, birds. We want to know the contribution of each enterprise, the feed for the chickens, the seeds and soil for the vegetables, the processing for the meat birds, those individual production costs for those individual enterprises. And then the revenue minus the cost of production is the contribution, what's left over to cover your overhead, and most importantly, still have some profits. So we're looking for the contribution from each of your individual enterprises. So let's look at an example, a case study. And I wanted to share the story of Mount Hawkeye Farm and their livestock farm in central Iowa. They raise pigs, dairy cows, meat birds, and layers. And overall, the farm business is not as profitable as they'd like it to be, and they want to know which enterprise contributes the most to the profitability of the farm so they know how to focus their energies and the overall growth. The dairy cows don't have a lot of overhead expenses, but they have a lot of labor, and they're wondering if all the labor eats into the profits and if it makes it worthwhile or not worthwhile. So we took a look at their numbers and we can see, the revenue and the direct expenses, the gross profit. And if we just look at the direct expenses, it looks like the dairy cows are the star at 92%. But we want to talk about payroll as well. And payroll is a real expense and a significant expense. We got the interns, the housing, the meals, the payroll processing, taxes, wages, workers' comp. I mean, that's a big chunk of change. And we want to see what the drivers are, what's causing the payroll expense to be as high as it is. And it's not that it's abnormally high or alarmingly high. It's just what enterprises are taking the resource of the people and the labor. So when we looked at the labor breakdown by each enterprise, and then we allocated the labor expense as a percentage, we could then see that the beef meat cattle was using up $17,000 worth of payroll. The dairy was using $30,000 worth of payroll. The meat birds were approximately $10,000, and so on. So if we allocated the payroll according to the percentage of labor hours utilized, we can then get a very different picture of how the farm business is doing. So we can then allocate the labor to the different enterprises, and we get an adjusted gross profit. And we can see that, the dairy cows were very profitable if we excluded labor, but when we allocated the labor, we get a very different story. And in fact, the pigs are more profitable because they take less labor. They may have more direct expenses, but once you factor in the labor, it changes the story. So you have questions about your business. You may be planning to raise chickens this year and you want to know at the end of the year, how do you evaluate if they were profitable? You want to decide if you should raise your own pigs for charcuterie or if you should buy them in. You may want to grow your business and you want to know if you should focus on wholesale or retail. Retail takes more work, but it generates more revenue. So you've got a lot of questions, real questions, and we can figure this out through enterprise analysis. And enterprise tagging in Ambrook is what's going to allow us to do that. So we already looked at the example of revenue. Do we record revenue as sales channels or do we record it as vegetable sales or the specific product sales? We can't do both, and we're going to have a bit of a mess in our income statement if we try. And likewise, with our expenses, we have the different enterprises, broilers, eggs, pigs, and then within each enterprise, we might have the same expense. We have feed for the broilers, feed for the layers, feed for the pigs. So, certainly there are workarounds. You don't necessarily have to do enterprise tagging, but it's going to make your life easier. And I'll tell you why it's a problem not to use enterprise tagging. And the first thing is that you're going to have long reports. And the longer your reports are, the harder it's going to be to read them and to see the important details. It's not as effective for tax filings because you're going to have to add up all the different feed expenses from the different enterprises to get the one number for your tax reporting. It's also prone to mistakes. If you have 3 categories for feed, one for each of your enterprises, then you're likely to tag the wrong feed expense for the wrong enterprise. And it's harder to see the profitability of the different enterprises. It's not impossible, but you're going to have to, take out your calculator, do some separate analysis outside of your Ambrook or other record keeping systems to figure this out. So in essence, we're creating mini profit and loss statements. So instead of seeing the business as a whole, we can see the individual contributions of the enterprises. And how does that look in Ambrook? Well, if you go to accounting, so you can see your reports and you click on the profit and loss, you can look at the report by enterprise and we can see the category. So what's on the income statement, what you'll use for your tax filing, and we can see the breakdown by enterprise. And we can see the total income and the total gross profit of each enterprise. So how do we get here? Well, it starts by tagging our invoices. So when you create a new invoice in Ambrook, you're going to want to, select the line item. What was the product that you sold? And to be clear, not every product is going to belong to the same enterprise. So you want to click on tag each item so that you can make sure to tag each line item to the appropriate enterprise. So for example, if you go to the farmer's market and you sell eggs, the eggs are part of the layers enterprise. And if you also sell escroll, now escroll is in the vegetable enterprise, it's still farmer's market sales, but you're tagging it to the vegetable enterprise instead of the layers. So we can use the invoicing in Ambrook to really specify, to drill down, not just the sales channel, but also the enterprise. And that can be really powerful. We can also use enterprise tagging for direct expenses. So when you look at a transaction in the list of bank feeds, you can see, where's the source of funds, where did the expense get paid from? You can see the amount, the cash outflow, and you can tag both the expense and the category. You can tag both the category of expense and the enterprise. And Paige is now going to walk you through a live demo because it's a lot easier to see how to get into that extra detail.
In Ambrook, there are two ways to split a transaction. The first way to split a transaction is by percentage. This is best when a transaction has just one category and you want to split the enterprise by percentage. To do that, we can click into the category tagger. We can tag the category as seed and plants, and then the enterprise we can split by percentages. Ambrook will split these equally by default, but you can easily adjust these percentages on your own. The second way to split a transaction is into different line items. This is best when you purchased two different things at the store and want to assign a different enterprise to each of them at different percentages. You can upload a receipt and it will read in these line items for you, but I'll go ahead and show you how to add the line items yourself. You can type in seed and plants, and then let's say we also bought some supplies at the store. We can assign the amounts to each of these line items and then click done to be able to tag them. We've already tagged these seed and plants according to the enterprise allocations that we know we spent on seed and plants, so I'll go ahead and tag this as field supplies. And then for the enterprise, I'm actually going to split this between farm store and my events business because I was buying some supplies for those enterprises. And then you can click tag and you'll see that the seed and plants is assigned to the percentages with the broccoli and carrots, and the supplies is assigned to the percentage breakdown between events and farm store for that specific part of the purchase.
So we talked about tagging the direct expenses, but what about the general expenses? I mean, newsflash, repairs and maintenance are used by multiple enterprises. It's not just, chickens or vegetables, the tractor you use in multiple enterprises. And if you repair it, where do you tag it? So we can do that. And to be clear, you have two kinds of expenses in your business. You have the direct expenses that are very clearly attributed to a specific enterprise. So seeds are very clearly vegetables, or perhaps if it's cover cropping, it might be very clearly for your livestock, or feed is very clearly attributed to one animal or another. And then you have other expenses that are not easily attributed to an enterprise. It's certainly part of production. I mean, you need the labor, you need the utilities, you need the equipment and repairs and maintenance, but they aren't easily attributed to one enterprise or another, and they're utilized by multiple enterprises. So when you go to enter an expense in Ambrook, you can, tag it as repairs and maintenance. And then when you go to click on the enterprise, you can then specify which enterprises are utilizing that resource. So if you're repairing the tractor and the tractor is just used to move the cages around or the housing around for the layers and the meat birds, you can, select which enterprises are utilizing that expense. Now, by default, it's going to go an equal proportion to the different enterprises that you tag, but you can also customize. So you may know that that piece of equipment is primarily for the layers and a little bit for the meat bird. So you can, do an 80-20 split, or you can do a 40-60 split, whatever makes sense for your business. And you can also preset the repairs and maintenance, so it always does a specific breakdown, or you can certainly customize it. So how do you allocate the indirect expenses? Do you do it equally among enterprises as a certain ratio? What do you do? So you have different ways to do it. You can allocate your indirect expenses as a percentage of revenue. So for example, if 60% of your revenue comes from vegetables, then 60% of that expense goes to vegetables. You can do it as a percentage of acreage in production. So if chickens use 20% of the land, for example, then 20% of your expenses go to chickens. You can do it as a percentage of time. If 5% of your time is spent in the farm store, then 5% of your expenses goes to the farm store. Or you can do it evenly split. So if you have 5 enterprises, then each expense is evenly distributed by 20% to each of the enterprises. Or it may just be your knowledge. You may know that the vegetables are the only thing that are utilized in the greenhouse, so all the expenses of the greenhouse go to the vegetable operation. So some methods are easier to allocate than others. At the beginning of the season what acreage is allocated to your different enterprises. Obviously, evenly split is evenly split. And, as your expenses come through, you're going to know if it's, mostly this enterprise or that enterprise. But if you're allocating things as a percentage of revenue, for example, or time, you're going to have to wait until the end of the year to know what that allocation is. So we can't just do it, in the moment as we're recording our expenses. So the solution for that is to create an enterprise for overhead so that you can allocate those overhead expenses at the end of the year. You can use preset splits. And then at the end of the year, when you do your analysis, you can make the adjustment through internal transfers. So for example, if you have a transaction and you want to categorize it for repairs and maintenance, and you will then categorize it to the overhead enterprise. And this is what it's going to look like when it's finally categorized. So what does this look like? So let's go through another example. Friendly Fields Farm is a diversified vegetable and livestock farm. They raise chickens, eggs and meat birds, pigs. They have a few cows and 3 acres of vegetables. They also have a farm store, and they use Ambrook to tag their direct expenses as well as their indirect expenses. So at the end of the year, they run their profit and loss, and they look at it by enterprise, and they can see their revenue from the different enterprises. They can also see the channel profit for each of the different enterprises, and they can see the channel profit margin after they've allocated all of the various overhead expenses. Now, if we were to just look at the channel gross profits, we might say that the vegetable operation is the star. But if we look a little bit deeper, we may see that, the vegetable and the cattle are the stars based on their percentage of revenue that is contributing to the overall profitability of the business. So the vegetables, 38% of every dollar earned is going to the bottom line. Likewise with cattle, 67% is going directly to the bottom line. Now I want to step back for a minute. The cattle operation is quite small, so we don't really know how it's going to scale up. The vegetable operation does look very star-like at 38%. And then the third is the layers. Now, we could also go a little bit deeper and estimate your time so you can get more details. And if we look at your labor, you can track your labor to see what did you invest in the different enterprises. we can take the channel profit margin and divide it by the total hours invested, and we can get an hourly profit, which is going to give us a slightly different story. So if our channel profit said, for example, the layers and the vegetable operations were the star, when we look at the hourly profit, we might see something a little bit different. The farm store only had 10% profit margin, but for the time invested, it was the most profitable enterprise. So the important thing to remember here that it's not just top line revenue, where do you get the most revenue? It's not just gross profit and gross margin. And it's not just profit margin. It's, what is your time invested? What is your dollar invested? And by using the enterprise tagging in Ambrook, you can really get that extra detail and that extra analysis to understand where you want to focus your business and your operation. So remember this, just because a product earns the most revenue does not mean it's the most profitable. And there's no one right answer or method. You know your business better than anyone. But with the information and using Ambrook as a tool to help you organize it, you can get the most out of your numbers to make the most informed decisions. And in summary, enterprise analysis can give you a deeper understanding of where and how you generate profits. Ambrook has the tools to easily track sales and expenses for each enterprise. It may not be perfect at the start, but it's going to get better as you see the way the reports come out. And as you look at the numbers and you look at the reports, you're going to get a better understanding of how you want to track your numbers and if you want to make adjustments. And if you need more support, the team at Ambrook is awesome and they are here for you to help you. They want you to know your numbers and they are creating the tools for you. So I want to thank you for joining me for this presentation on enterprise analysis. My name is Julia Shanks, but I encourage you to reach out to Paige. If you want more resources, I invite you to check out the Farmer's Office or the Farmer's Office website. And obviously the Ambrook website has a lot of great tools as well.